Hey guys, Adam Rose, Vice President and Senior Loan Officer for Western Ohio Mortgage here in Sydney, Ohio. Today is another episode of the Mortgage Guy Podcast. Today we want to talk about owning versus renting. So the actual snapshot, just to reiterate a little bit here. So let me just go back to the principal and interest only, no escrow stuff, okay? So 10-year snapshot, renting, $206,000 in that scenario is how much you spent over 10 years. Owning, $216,000 spent, again, on principal and interest only, okay? I don't want to confuse the two. So we got 10 grand more on owning. Monthly payment by year 10 and renting is $1,960. Again, year 10 and owning, principal and interest, if you did a 30-year fix, $1,800. It's still flat, okay? Still flat. Again, escrows could change slightly. We can't forget that, okay? So that's something that you may want to play with in your head if you're trying to do some comparisons or you're trying to call me out. That's fine too. Equity created with renting, 0. Net financial position, 0. Equity and net financial position on owning, 150 grand in this scenario, okay? So we can kind of see this, and this can be used as a tool down the road, okay? It can be used if you want to move into a different market. You're going to make some money back on your investment. You can use it, when you pay off your house in general. I always suggest people opening up an equity line against it just to have it readily available so you can pull money against it for any kind of repairs, maintenance, buying something in cash because it could be cheaper. Opening it while your credit's good, there could be some sort of financial situation that you go through, or a job loss, or a medical situation where your credit tanks and you're not able to obtain any kind of personal loans or auto loans, or if you do, it may be very, very high interest. So opening up a credit line against your home is great. They all vary, all right? They all vary. I've seen 5-year draw options. I've seen 10. I've seen 15-year draw options. But open it up while your credit is strong and you have a pretty good equity position, maybe around year 10, right? Maybe you can open up a $100,000 line of credit and then have access to that to get you out any kind of tight spot that you might have found yourself in, because obviously, life's very unpredictable. A lot of things can happen. But it's a nice inflation and payment stability. Renters are fully exposed to inflation, as rent typically does rise every year. Now, it's not to say that homeowners aren't exposed, but it does lock in the majority of their house payment. I like to say majority, meaning the principal and interest is locked in. So that is a tool against inflation on that part. However, you're exposed to tax and insurance increases, which is also replicated in the 3% increase in your rent payment, right? Because the landlord might be increasing that rent payment due to tax increases and homeowners insurance costs and stuff like that. So that accounts for it. But it is a nice lock against inflation over the long haul for sure. And at some point, your mortgage is going to feel cheaper than the renting expense, where rent never feels cheap just because you're not getting anything in return other than a roof over your head, of course. But addressing the kind of the flexibility argument, renting in general, it does offer some flexibility, and flexibility has its value for sure. It's just, it just doesn't carry that long-term effect in regards to cost versus asset, that a lot of renters may underestimate, or may brush off. Again, owning a home isn't for everybody. Renting isn't a bad thing. I mean, it also depends on your situation, right? You might be in a market or a job. If you plan on picking up and leaving in 3 years or less, renting's a great idea instead of buying. You're not building enough time. You don't have enough time to build that equity or get that use out of that financial decision that you made. Or if you're looking at career changes, you're looking at moving out of state, anything like that. Renting absolutely makes sense, but if you feel like this is a goal of yours, it is a fantastic financial decision to own a home. And again, that market timing versus time in the market, I think, is more important when you compare those two, because we always get so caught up on price points and rates and what's happening and economic factors. What's going on in the economy, your industry that you're in. Is there high opportunity for job losses or job growth? A lot of that plays a factor. So don't take this as I am dissing people that rent, because I am not. This is just a financial tool that I want to make sure that we have some kind of comparison so you can make a decision. Does it make sense to buy versus rent? Again, your personal situation is going to play a pretty big role. So with that being said, the question becomes is not whether, is owning cheaper than renting each month, right? The real question becomes, where do you want to be in 10 years, in 15, and 20, and 25, 30, whatever it is. What does retirement look like for you? It's just one of those things that you've really got to think through more than the immediate, right? We're always so hyper-focused on that I want you to take a look down the road and try to see where you see yourself. What are your goals? And it's a sad thing that we always got to think about retirement, right? It's almost like an end goal, like we're racing to retirement so we can just stop working. Well, owning a home is a huge tool and one of the biggest wealth builders in the country that can help facilitate that retirement possibly. And that's something to consider. That's all. I hope this information was helpful, get you thinking a little bit about it. Again, time in market versus market timing on when you can purchase. And there's a lot of other tools out there to assist you in the purchase, a lot of great programs. We've talked about no money down options, very low money down options. There's so many great options out there. Give us a call if you want to walk through those, what might be best for you and your situation, and maybe what some of your goals are in the long term. Because I'm going to follow up this podcast with some options on the renting and the cash flow ideas versus just owner-occupied. So hopefully that information was helpful, guys. Remember, subscribe on YouTube. Check us out on Apple Podcasts, Spotify, and we'll catch you all